sponsored by the Securities and Exchange Commission of Nigeria.
Welcome to Eye on Nigeria's capital markets. I'm Wole Famrewa. This is Johannesburg Stock Exchange, Africa's largest bourse, with a market capitalization just under $900 billion, and average daily trades are in excess of $1.5 billion. Some estimate that between 30 and 70% of trades are linked to the activities related to derivatives. The management of the Nigerian Stock Exchange has recognized the need for such products in the market, and on this edition of the program, we take a look at what they are doing in this regard. December 19 will go down as another momentous day in the history of Nigeria's capital market. It marks the day the Newgold Exchange Traded Fund was listed, a first in the history of Nigeria's capital market, and part of a broader plan by the NSE to introduce a series of new products to deepen the market over the next few years.
We're very excited about this product, and you could see the excitement on the floor of the exchange. It's a product that has been long expected. It's a product that gives us exposure into other asset classes that we wouldn't otherwise have had in the capital markets. The ETF asset product category is growing at an amazing pace. I think assets under management for ETFs is now $1.5 trillion, and is projected to grow up to $5 trillion by McKinsey & Co. We want to be part of that growth. And so when we made our medium to long-term strategic goals and said we wanted to launch ETFs in this year, I'm sure a lot of people expected us to launch an equity underlying ETF, but we felt that gold would actually give investors exposure to gold and probably allow them to participate in the run-up in prices that we've seen in gold. So it's just the very first ETF. There are many more to come. We're excited about the product category. We believe that it has a good omen for our equity markets, because typically ETFs and futures and options actually drive activity in the underlying market because of the kind of positions that you can structure.
As part of ongoing reforms, the management of the Nigerian Stock Exchange last year announced plans to deepen the market by launching 3 new products: options, financial futures, and exchange-traded funds or ETFs, all by 2015.
We've done quite a lot of work in sort of investigating markets that are appropriate. The Nigerian market, given the size of it, clearly is a market that should have this investment opportunity. We will bring diversified asset class to this market, so investors will now have the ability to invest in not just the usual fixed income and equity securities, but also a commodity security, which, if you look over the history, commodities provide an excellent diversifier for investment portfolios. So exchange-traded funds are securities that allow investors to either track the performance of an index, of a share, a basket of shares, or certain commodities. So the Newgold ETF is an exchange-traded fund that tracks the price of gold. Its holdings are physical bullion held in a vault in London. We've got about 41 tons of gold physically backing the securities on issue. Current assets under management is $2.2 billion. The beauty of ETFs is that they make these kind of investments very accessible to everyone. So, the investor base can be retail, it can be institutional. In South Africa, we have a very diversified investor base, spanning into retail investors and institutional investors. A lot of investors, particularly institutions, use it as a core piece of a portfolio. So it gives them very good access to the gold price. You don't have to hold a share price of a gold producer. You can hold the asset itself directly.
Considering that for decades, Nigerian stock market investors have been accustomed to investing only in equities or fixed income instruments, the introduction of an ETF is something that will take some time for investors to get used to. What's more, low liquidity for many equities on the bourse raises concerns around the liquidity of the new product. But Absa Capital, the originators of the deal, and Vertiva Capital Management, the sponsoring local broker for the listing, have made arrangements to address concerns around the tradability of the new product.
The concerns are valid. However, we need to note that as part of the structure of the Newgold Exchange Traded Fund, there's a local liquidity provider. Now, what does that liquidity provider do? The liquidity provider stands as a counterparty of last resort for any trades on Newgold. And on the back of that, you even have APSA, that is the ultimate liquidity provider. So in the event that there are challenges creating liquidity locally, it will fall back on APSA to ensure that that liquidity is in the market.
It's no longer news that foreign investors currently dominate activity on the Nigerian Bourse, as local investors remain cautious after enduring heavy losses as the Bourse closed lower in 3 of the last 4 years. But in addition to strengthening market institutions, the introduction of new products is a key initiative designed to boost liquidity and local investor confidence.
You can create an ETF on a basket of any of those securities. Now, whether you want to create it on the total index itself, the NSE All Share, or any of the sectors, as we all know, the NSE has actually remodeled all the sectors. So you can have one just on banking, you can have one on food and beverages, you can have one on building materials, and so on and so forth. From that perspective, it will allow each individual or each investor to actually choose which sector they want exposure to.
One of the key areas that we're focusing on in transforming our market to a world-class market is deepening and broadening the market. And you can't deepen and broaden the market without certain kinds of products and without introducing new products. I'm very, very delighted about the work that the stock exchange has done in bringing to realization the development of an exchange traded fund.
The Nigerian Stock Exchange is at a point in its history when it's transiting into a global exchange. We have the talents, we have the drive, we have the willingness, we have the right regulatory framework and the right regulatory support, and I believe that very soon you'll see an unfolding of innovative products, deepening of the market.
Officials at Nigeria's Securities and Exchange Commission note that the launch of the Newgold ETF is only one of several new products in the pipeline for Nigerian investors to support the growth and development of the Nigerian economy.
Well, actually, there are quite a few products which we're expecting in the market. One of them is the infrastructure funds, which has been long overdue. And that fund basically would be geared towards investing in infrastructure. Right now, I mean, that type of fund is what was used to finance a lot of projects in South Africa, in Singapore. And we're hoping that that sort of project will finance roads, power, and those sort of big projects. And so what we need to do is to have the enabling environment, rules, educate the investor, and then the market operators put together the fund. And hopefully we expect to see some of them debut 2012. Private equity funds is gaining ground, gaining momentum. We've had a lot of inquiries about what we have in place, and so what we have managed to do now, we have come up with rules that have been exposed, and very soon they will be operational. The private equity fund is a means of, first and foremost, it will bring in a lot of the pension fund assets into the market, which can now be invested in those companies that are not listed on the exchange and require equity. And we're hoping that with private equity developing, those businesses will eventually get listed. We've had so many inquiries and we have registered one. Very soon we're expecting about 2-3 others as well.
The next phase of the NSE's product launch program is the launch of options by 2013 and futures by 2015. Most analysts point to the importance of these products.
The benefit and the need for this just cannot be overstressed. That's just the truth of the matter. If you go and look at sort of studies, there's a very good correlation between the depth of your options and sort of derivatives market and how that translates to the quality and the efficiency of the underlying cash market. Whether it's interest rates you look at, whether it's commodities you look at, whether it's fixed income you look at. The bottom line is that without a sort of decent, solid derivatives options market, it's going to be tough to attract foreign players into this place. Essentially, I think if I go back to sort of my own experience trading equity derivatives and structuring derivatives in the U.S., one of the things you find is that if you get into a market where there is no derivatives in place or where it's difficult to hedge your positions, the odds of you getting approvals, for example, from your credit team is very, very low, because it's going to be tough to manage that position and to sell. If we bring that to Nigeria, one of the big benefits of options in our market would be, you look at the likes of, say, Nigerian Bourse and the GTBs and the heavily traded stocks of the world. A lot of investors, the more I speak with them, would like to take more position in this market. But then the real question becomes, look, if GTB sells off again, like we saw, when the market crash came, and I just use GTB as an example. I guess if the market sells off again, how do I manage this? And a classic way to answer that question is to provide them with options, as an example. For example, you hear people say things like, wow, these are new products or new instruments that were created by Wall Street a few years ago to, sort of steal money from people because of the crash that we had. The second thing is that people get this idea that options, derivatives are instruments that are essentially just for speculating. Again, that's not true. I think in my view, one of the sort of primary benefits of options is just to give you a tool to manage risk. In sort of the financial world and the financial industry, as a portfolio manager, as an investor, one of sort of the biggest things on your mind is risk. How do I manage my risk? If I can give you better risk managing tools, the odds of you sort of investing more are a lot higher. Now, that's one thing that options and, ETFs and things along those lines, that's one thing that they give you, is the ability to manage risk. Another major benefit, especially for a market like Nigeria, is that these provide you they give the market better depth and liquidity, because, the minute you buy an option contract or a derivative, the person who writes you that contract needs to hedge that position, which translates into sort of more activity in the market.
But introducing these products won't be easy, as many analysts point to what the local authorities need to do to get these products on stream.
The very first thing, in my view, is just the legal framework in this country. The sort of level and the depth of respect for law as we have it right now in Nigeria is one that would make an options market very, very difficult to enforce. Because essentially, all an options contract is, I write you a contract. If you came to me today and said, look, I want to buy from you a right to pay 10 naira for GTB in a year. And I write you and we price that, and I tell you, look, for this right you're asking me for, it will cost you 2 naira. Now, that contract is only as good as the paper on which you write it on, right? If by the end of the contract, I ask you to give me my money or give me the GTB shares and I can't, what's your recourse? Right, the legal framework in Nigeria needs to be a lot tighter for this to succeed.
ETFs, the market is huge. We still need more listings on the market. We need more larger and smaller companies on the market. There still needs to be financial literacy, right? Educating the public as to what these things are about, and the responsibility does fall both with the investment community as well as the regulators, as well as the Nigerian Stock Exchange, to ensure that these things are well understood and not just another product on the market, right, that can actually just fuel a boom and a bust situation.
There's a need for a clearinghouse, especially because these are exchange traded options. If they're OTC, that's a separately, completely different issue. There's a need for a clearinghouse, which basically is a house that both buyer and seller are going to face to transact in options. There's going to be a need for a balance sheet for this house. There's going to be a need for, just setting this up properly.
Clearly, some work needs to be done to bring options and financial futures to the Nigerian market. But given the pace of change driven by the new management of the bourse, few will bet against the NSE to launch these products as planned.